Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look, an updated look at the euro versus US dollar. Today's date is April 3rd, 2024. The non-manufacturing ISM data came in weaker than expected, with the prices paid component moving sharply to the downside. That has the dollar moving back lower and the euro versus US dollar moving higher. We still have Fed Chair Powell coming up at around the noon hour, and that's going to have another impact on the market. We'll see. So it's important to understand the technicals that are in play, because they're going to help define the bias and define the risks and the targets for the currency pair. So let's get started. This morning we were looking at the price moving above the 100-hour moving average. Recall from this day and this day and this day right here, the price found resistance against the 100-hour moving average, and that pushed the price further to the downside. In the Asian session and the early European session, the price moved above and below that level, but for the most part found resistant sellers against the level, pushing lower. But then the U.S. data traders came in and pushed the price back above that moving average, and then we had the ISM data come out, which gapped the price higher, even higher, getting above the 200-hour moving average in the process. That's this green line right here at 1.0798. We also moved above the swing area, going back in time to this area through here, where we had a number of different swing lows and swing highs, ultimately forming a floor here before moving to the upside. We returned to that floor right here, and over the last week or so of trading, the price has traded above and below that level, but also found resistant sellers against the level, pushing the downside. So the move above both the 200-hour moving average and the swing area opened the door for further upside. This area right now is going to be the key bias level on the downside for this pair. As long as the price can remain above that level, the bias remains to the upside. So what does that mean? That means that if Fed Chair comes out and he is more hawkish in his comments, and the price starts to move back below the 200-hour moving average, back below this swing area right here, the bias shifts from a little bit more positive to a little bit more negative. We're going to have traders looking back down toward the 100-hour moving average as a result. That is not the case right now. The bias remains more to the upside. And in the process, we're also testing the 38.2% retracement of this move to the downside. That level comes in at 1.08219. So we are testing the key first retracement of a trend move to the downside. If we get above that level, as you can see, we have the 200-day moving average, another key technical level. That moving average, along with the falling 100-hour moving average, stalled the rally here before moving to the downside. So it's too is going to be a key level to get to and through. So what does that mean for the Fed Chair? Well, if he is more dovish or less hawkish, then a move above the 200-day moving average would open the door for further upside momentum in the pair, and have traders scratching their heads as far as the downward trend here in the euro versus US dollar. By the way, inflation data out of Europe came in weaker than expected today, which should have sent the price lower, but as you can see, we're seeing the euro versus US dollar move to the upside because the focus is on the US dollar and its weaker price data today, and subsequent move down in that in the greenback. So that's my technical look at the euro versus US dollar, the updated technical look. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.